Well, Costco went ahead, reported some earnings for us. We're going to take a look at this. Stock is down around 2% after hours, after being up 1% in the normal trading session, in which the market went down. So nothing too crazy there. We'll take a look at these earnings and see what we have. Obviously, this is the pandemic quarter, so that's what I'd like to call it. So you'd expect higher demand in the stores. So let's see if that runs true. So Costco posted an inline EPS, $1.89. Not bad, all things considered. Especially inline on that EPS standpoint. When you think about all the additional costs that have to go into what they're currently facing as far as pandemic's concerned. Revenue of $37.27 billion, up 7.3% year over year, beat by $610 million. That's right. Not bad on that aspect. One thing to note, obviously, you talk about companies like Walmart posting a 10% increase, but I don't think you can ever complain about a 7% increase when you're talking about $37 billion. That is a big increase. Adjustable comp sales in the U.S. of 8% and e-commerce 64.5% up. Very good e-commerce growth for this company too. Very good. 64.5 is the best time. Really the best they've had as far as e-commerce growth. Comp sales were up 8%, excluding fuel and gas. Obviously important. During the quarter, and e-commerce soared 66.2%. Net income was $838 million versus $906 million a year ago. Obviously, a year-over-year decline in EPS, but we'll get into this report here and actually take a darn good look at it. So, from a 12 weeks perspective, you see overall U.S. grew sales 5.9. Canada, 2.5% decrease actually in terms of comp sales. Interesting to see on that aspect. Off a 36 weeks number though, 36 weeks they've got 3.1% growth in Canada. Other international really being China for the most part. Pretty interesting. So total company at 4.8% in comp sales. E-commerce just massive on a 36-week basis, up 31.8. But for the quarter, up, that's right, 64.5. Pretty cool. So definitely something you like to see. Overall net sales, when you look year over year, which is what we like to do. Oh, yeah, that's good. We'll look at the, obviously, quarter. That's what I'd like to do. Look at the quarter year over year. This year they posted a $36 billion number. Last year a $33.9 billion number. So good growth on that aspect. Membership fees have increased as well. You like to see a growth in membership, obviously, because it's a membership-based company, right? They make their money off of selling memberships. That is where the company's profit comes from, is memberships. Obviously, with low costs, they typically sell items very close to cost, and therefore the margin's low. Where they get margin is memberships. So merchandising costs, you see a rise year over year, and you're going to see that number increase definitely substantially here in the next quarter for them, as suppliers are charging more for products. SG&A expenses, $3.8 billion versus $3.3 billion last year's quarter. Nothing too insane there. Net income, obviously you see a year-over-year difference here, $838 million versus $906 million. Definitely a little decrease, and they're a company growing EPS pretty massively. $2.05 last quarter or last year, $1.89 this quarter. Completely not unexpected by any means. You anticipate a decrease, obviously, for this quarter and the following quarter just due to the pandemic costs. Nothing shocking there. You're going to see EPS hits for every company, really. From a balance sheet perspective on this company, we're going to be looking, which is a weird one. They're giving me 6 months out on this one. So from a total current assets perspective, they've got $25.2 billion versus $23.4 billion if we're talking about 6 months ago. Total assets in general, of 51.7 billion versus 45.4 billion. So you did see a good increase in terms of assets for this quarter, which are pretty noteworthy. Current liabilities of this company, $22.7 billion in current liabilities versus 23.3 or 23.2 last or 6 months ago, I should say. They're confusing me. Why don't we just do year over year? So right now their total current liabilities are pretty close to the total current assets. Not much differentiation there. Interesting to note. But if we're adding up all liabilities, not much long-term debt on this company. Overall total liabilities of $34.5 billion versus a $51.7 billion in terms of total assets. So it leads to a total stockholder equity of $17.2 billion. So very good overall. Balance sheet's not looking bad on this company, obviously. You could see a better balance sheet for sure as far as those current liabilities are concerned, but they can pay off all that for the most part. They've got the money to pay it off, and hopefully they do in the near future. Pretty excited for this company. I mean, you see great e-commerce growth. There obviously, it goes without saying, there have been some talks of definitely people kind of boycotting Costco due to their mandatory mask policy requiring their shoppers to wear masks. And a lot of people have pretty much sworn off Costco because of it. Now, I think those people might be a little ridiculous because technically it's a company's decision if they want you to wear a mask. Then you got to wear a mask in there. So if you choose not to shop there, you choose not to shop there. But very good just results for this company, I'd say, through pandemic quarter. You'd like to see a little bit larger of an increase maybe year over year. I don't know. I think I was perfectly fine with these results, and I think they're pretty good. EPS didn't fall as much as I had expected either. I expected a bigger impact on EPS, and I think next quarter you probably will see that most likely, as cost of goods are going to rise quite a bit. But overall, not a bad quarter for Costco. Not at a point where I'm ready to necessarily start buying. I think it trades at a very high multiple, right around 36. PE of 36. I think it's a pretty high multiple for the company. I do think very long term, though, this is a very good pickup, especially if you talk about it's an all right dividend and it's got room to grow. So definitely there's potential to this company. They're rocking it. Number one membership based company, obviously, retailer out there. So very, very smart company. I think they're doing super well. Thank you.